Hello everyone, my name is Ananchenko. I'm a CTO and the co-founder at StellarSoft. Today's guest is Roland Lukas, CFO and COO at Internet App, a Munich-based e-commerce company that has built its name through performance marketing, data-driven decision making, and an ambitious push to scale D2C brands internationally. This conversation is going to be interesting is because Internet App is coming out of a very aggressive growth phase. The company has talked publicly about expanding its leadership team and internal capabilities while continuing to build brands and international reach. We'll talk about their challenges, solutions, and the general growth. Roland, welcome to the show.
Welcome. Nice to be here. Thank you.
Absolutely. Roland, I do always prefer to start it with the introductions, if you will, and like so the listeners can learn a little bit about the guest, his background, and the company's background. So you worked as COO, CFO, and HR leader across very different environments. What patterns do you keep seeing when the company hits a serious growth or restructuring moment?
Well, yeah, I used to run a manufacturing company in metal sheet production as a CEO and CFO for 4 or 5 years before I went to Internet Up and I changed to e-commerce. And if you
Hmm.
see the job as a CFO or COO, there's a lot of things that are similar. But if you see the
Hmm.
growth patterns, it's totally different. Totally different. Like coming from that traditional manufacturing companies where the structures are the same since 1992, and
Hmm.
then seeing the growth patterns that we just achieved and two founders did achieve very successfully already before I started, that's just amazing.
Hmm.
So yeah. Uh,
What pulled you in e-commerce after experiencing industrial and manufacturing businesses?
Well, I used to stay in companies very long with different functions, and the last company I stayed for 10 years. That was machine building and metal sheet. Before was bus production, and
Hmm.
yeah, I didn't want to go on as a CEO of metal sheet company. I wanted to do something new, something fresh as a CFO, always kind of like with the operations and HR background that helps me. And I wanted to
Hmm.
see a new structure of company. And I got to know Alan and Damian then, who's the founder of the company, and saw the story. So I was in very fast with the decision to
Okay,
start and did that already in the beginning of 2024. And yeah, uh, perfect decision.
sounds good. Perfect
Yeah.
decision. Okay, great to hear that. And then, if when you joined Internet App, was there any situation where you told yourself that this company had outgrown its previous operating model?
Well, I think if I understand the question right, we do or did have like 6 month circles where we kind of like outgrow
Hmm.
the operation mode because uh, when I started as a CFO, the first two things was just putting annual report for 2022, 2023. And then, yeah, we had 13 million turnover in 23. And in 22, it was 5.9 million. So you see, the change is so big considering products sold, products offered, and also people working there. So the operations mode is gonna change naturally by the growth and the extension of the materials. And that is considering suppliers, that is considering the management of the freight and everything. And
Hmm.
that is also considering systems that you use because we still do not have the perfect ERP system, but we kind
Hmm.
of like renewing systems like half a year, seeing that
Hmm.
that one fits well to find the perfect solution, which we finally came to a point that we're close now, but there's always renewing in that growth period. And I don't think that you could grow without just considering that change elements.
Hmm. Okay. Um, Interesting. And like you often describe Internet App as the performance marketing company, like focused on the performance marketing. But under the hood, how do you define the business today?
Mm, Performance marketing is the key to anything. So any product that we do, that Internet App does, is based on a great performance marketing strategy. Mainly via Google Ads. We're sure gonna go to that again later. But the differences is that it used to start with a dropshipping platform where the company sold goods via dropshipping, which was easy to handle. But the biggest
Hmm.
steps came with putting up brands. So
Hmm.
Internet App not only has the platform SnapBuy, we do have brands considering vacuum cleaner, Miva, women's cream like Feminera and face things. And that's a big difference. So to treat the operational, and in any case, it's a big difference for the staff to handle the drop shipping with the suppliers that mainly come from China and have other ways to deliver and everything to the brands
Hmm.
that are becoming love brands now and having a high retention and return customers and
Hmm.
handling that stuff from stock to not having a stock when it's drop shipping because the stock still belongs to the seller until the goods is delivered and that's a big difference.
Hmm. Okay, interesting. And from the outside, the evolution from product testing to owning inventory to building brands is like is different than what the other companies do. How would you explain that journey in operator terms?
Yeah, the journey was big. That was probably the biggest change because, on the one hand, it is the right and perfect step to say you go away from just doing drop shipping and paying the seller a higher fee for all the case to going to the production company, buying the good, changing the development a bit to make it look even better, and then paying less for the goods because you get a higher margin there. So that's absolutely good and necessary. On the other side, uh, any company who does that has to consider that the forecast and planning of the goods sold has to be totally different and much more precise because the advantage of drop shipping is you don't pay the seller until the goods are sold. And of course, with changing into own stock, you gotta pay before, you gotta make sure that the stock is sold, and you gotta be on that. So that's been one of the biggest challenges that we went through.
Okay, how did you approach it? Was it investor money? Was it like risk that the founder made, or what was the process in terms of the
If
thinking here?
if you see Internet App, that Internet App is 100% financed by the two owners. So we
Hmm.
don't have any additional money. What I did negotiate in 2024 was a credit line with a small
Hmm.
amount, which helped us doing the step and buying the first goods. But the rest is just without any investment. It's just financed by them too.
Awesome, sounds good. And the
And
company like Internet App, uh-huh. Sorry, say it again.
sorry, no,
Did you
no.
want to fit? Did you? Okay. And the Internet app often talks a lot about the data, about the customer understanding, localized market knowledge. What do most operators, e-commerce operators, still misunderstand about that?
I don't know. I don't think that there's so many e-commerce companies that follow the guideline that Internet App does, like combining that ways from SnapBuy, where you do drop shipping, then following, analyzing the customer's behavior, getting a product out, selling it by yourself first, and then putting a brand on. That's totally different. And I can see that there's a lot of potential in Internet App compared to others, since we didn't even use possibilities like marketplaces yet. So
Okay.
we very strong in Google Ads. We do a little bit of paid social, which we can go on. And then there's a lot of potential internationally to go on. But to I think that way it is very, very hard, considering what Internet App does, to explain the USP like in
Hmm.
5 words. But what's been done here is unique. So I cannot really consider others in that case.
Hmm. Okay. Um, when you look at the product or a category, what tells you there is a real brand potential there, not just a short-term ad arbitrage?
Well, it's all about data analysis and following the trends. And if we see now that we following products, then it's not that we started following products 1 week ago. It's like the founders starting following that product list already in 2020. So you steadily follow products and watch it and get your experience, which one is really going to make it, which one not. And
Hmm.
yeah, so that's how you just get into that point to know that 90% it's going to work before you get the product. And you don't do it after 2 months of success. So yeah.
Awesome. Okay. Sounds good. I mean, how do you balance speed with discipline when the market rewards fast decisions, but operational mistakes compound later?
You have to talk a lot. And you gotta, of course, we learned out of a few things, because you always have that situation in a growth pattern to see that something worked till this level, and you gotta see when's that point where you gotta change something in behind. And you always gotta see the logistic chain, you gotta see the operations chain. How will that work? And that's here in Europe, which is kind of easy, but we're also selling in the United States, Great Britain, which has
Hmm.
other challenges that we just mastered. But this is just always about having good exchange and seeing when you gotta slow down.
Hmm. Okay. You talk a lot about stabilization, and like for anyone who is listening, um, Internet app experienced pretty significant growth of the past years, and now the real question and the real focus is stabilization. What does stabilization actually mean inside the company?
Well, you do have a turnover now that can reach 40 million all over the group, and it's been 34 million last year. And it is about not like, let's see the numbers again. It was 13 millions in Internet Up Germany in 24, and in Germany 22 million in 25. But in the group, which is also handled out of Germany, it's been 34 million. So it's about not going there and saying next step will be doubling turnover. It is about gaining fruits from the things that has been explored the last years. So if you see, I guess we're gonna come to KPI and all those things later. If you see that the return on ad spends is the key figure to control the growth, then of course during the growth you always spend more to reach a certain level of growth, and that is there's been big steps made. There's brands built, and that's the point for now for the next 6 or 12 months.
Okay. Where do companies usually feel the pain first after the hyper growth phase? Is it finance, operations, design, cash flow, forecasting, culture?
Well, you are always into all of those points because, as we said, we don't have a credit line of 3 million euro or anything else. We still do it self-finance, so we just think about decision and look for a good conversation with suppliers and everything to make good deals about that. And then we had several experiences where we had pain with logistics, and then if it's like if you have a month where you sell less and you have it on stock, of course you feel it for a moment, and so that's just a chain which is, I guess, very normal in that scale-up situation.
Cool. As a CFO and COO, how do you decide which costs are healthy scaling costs and which ones are simply growth hangover?
Yeah, you gotta see two sides. You gotta see the costs for entering the market, the product, or whatever. So you can kind of like easily calculate when you're gonna have a return on invest on that, if it's about the product or the market, and then you can take a decision. And then you have structural costs, which is always kind of like, harder to just put it on a ROE because it has to be done with the complete set. But that's the two main points.
Cool. Let's talk a little bit more about challenges, growth, the plans that you built as the operations director and finance director. So when you started putting together a more structured plan around finance and operations, what worked faster than expected?
What worked faster than expected? It was very good, for example, to enter the American market, which was kind of like really nice. There was a higher grade on dropshipping, but we started with I think 1 I don't know million, and we're at 6 million now in that period,
Hmm.
which was good. And yeah,
Okay. So maybe like if it's challenging to go that route, maybe you remember the plans that turned out to be harder to fix or implement than it looked from the outside.
we did like besides the logistic, you do have to consider a lot of logistics and tax regulations, considering deliveries from China. So we always had that steps that we could just solve and get over it. But to get a mutual understanding with that took some time to convince any seller to do the things like that were planned was took some time. It all worked out well, but it's like there's no step that doesn't yeah ask for communication and for another check and anything. So, yeah.
Mm-hmm. Okay. Okay. Sounds good. And what have you learned about retention as a lever when customer acquisition has historically been such a big strength?
Yeah, return customer is the key to success, and that's what it's all about. Like, if you see our beauty brand, then we've reached a quote of 35% now, which is really good considering the mix of products. Because, as you can imagine, we're performance marketing, so the ad spend is the main cost driver, and if you have retention customers, then you can do them favors with your love brands, and of course you gotta be more into it, considering customer service and everything. But that's just what it's about, and it's really the best feeling to. We're gonna publish 3 new products on Feminera this summer, and that's the best feeling because we know that the customers wait for it. We kind of like collected the opinion, and that's best potential. We're gonna release a new vacuum cleaner model soon, which means that's gonna be the first time we're in that circle with the vacuum cleaner, and
Mm-hmm.
that's what we're all about to do.
Awesome. Sounds good. And a lot of your revenue comes from the Google ads, like revenue has been driven by Google ads. How do you think about concentration risk when one channel is doing so much of the heavy lifting?
Yeah, there's of course other channels going, and there's AI possibilities coming up, but still Google and the channel is unbeatable the way it's driven here. So, but of course we do use others, and we could start going more on social. We could go on Amazon or other marketplaces, and that's what we'll do in right
Mm-hmm.
time.
Understood. Okay. And as competition gets stronger and product quality of the products from China improves, where does your differentiation has to move next? Have to move next?
Yeah, you gotta see that brand by brand. If you see Feminera, the beauty brand, then we're still at 100% production in Germany.
Mm-hmm.
And we'll stay with that for the moment. And if you see vacuum cleaners, then it is a Chinese product, but we're gonna get a new launch and a new product that we just deep into the development and anything before it comes out to differentiate. And if you
Mm-hmm.
see the platform or other things that we sell, then we're anyways analyzing the market 24/7 and 365 days of a year to know where's a differentiation necessary, because the differentiation, yeah, has been there since day one.
Oh yeah, for sure. And you've got, as far as I know, correct me if I'm wrong, but you've got your product and technical teams inside and like largely owned internally, basically. What are the advantages of keeping that muscle in-house during a phase like this?
I didn't understand which positions.
Technical and product leadership teams, are they
Yeah,
in-house? Or
that they are in-house, but we mainly combine the product management and purchasing with that, and then we have strong suppliers on our side, which like the product manager is the one who does the purchase, follows the product during his whole development, and is very good at those whole thing, and that in our point of view has to stay inside, because you just have to have that knowledge, especially when it comes to brands. That's a bit different if you just sell something via dropshipping, but if it's about the brands, it has to be like that.
Mhm. Interesting. That does it have anything to do with speed to market, like production efficiency, like, or it's more about the knowledge base that you're talking about?
Both, because you have speed to market, because you have the person who has the knowledge about the product and
Hmm.
the needs, and the one who knows the supplier or suppliers and knows what to reach when. So it's a combination out of both.
Awesome. Okay. And I saw that there was a new release of the new Miva model for the product. What matters more now? Is it operational readiness to launch a product or improving the product? Is it speed to market, or is it just margin confidence?
No, it's speed to market. It's the right time, and there's new techniques that we want to use now, and new model with a new design and some product features that wasn't able before. So we just do that, and we're just starting now, which fits good to the product life cycle of the first vacuum cleaner and is the right speed at the moment.
Awesome. Sounds good. Let's circle back a little to the fact that you guys are self-financed by the two owners. Um, how does it change the game in general? How does that shape the way you make decisions compared to the venture-backed e-commerce businesses?
Yeah, it is totally different in a few sides. In one hand, like you have that common goal. Like if you invest in money in new products, then you just do it hand in hand with the shareholders, and there's nobody else to ask about it. On the other
Hmm.
side, you always, of course, have to find and think about solutions. What's the right point to invest in a new product? When to start? When not? The planning has to be different, and that's the biggest, difference.
So, if you were to summarize here, does it help you become a better operator, or does it help you become a little bit more cautious?
One day the first, and the second day the second, because situations are always different. You gotta be more cautious, of course, because you gotta see in your strategy what risks you have and what might come. We've been through that very good, and that helps you getting better in operational. So of course we started slow, like if you would change from dropshipping to like putting out the whole group of products in your own stock, that might be harder. We even don't stock ourselves. We got a good logistics partner who also does the fulfillment, which is important because that's not our core strategy. But yeah.
Hmm. Interesting. So it's like it's both at the end of the day, and like if you were to touch on the metrics within the self-funded business, what metrics become non-negotiable when you scale in without the outside capital?
Well, it starts with seeming to be rather operational figures of return of ad spend, which is crucial. And
Hmm.
then you have the gross margin. So we calculate, of course, the COGS within it. And
Hmm.
with the scaling, it is about contribution margin itself, because you gotta see then when the structure costs grow, the gross margin still has to deliver all of that, and that's how you have to go. So we kind of like control due turnover, ROAS, margin every week, knowing how big the structure costs are, and that's the operational side. And then, of course, you can go deeper into any product. We can consider return rates, which are very, very important. But for the
Mm-hmm.
overall, that combined with a cash planning is the most important.
Awesome. Okay. And as you scale and look ahead, what will tell you the internet app has successfully made the shift from rapid expansion to durable scale?
The fact that there's brands now that increase on turnover, they increase on gross margin, they give us good margin, and return customer increase. So it's not
Mm-hmm.
only about the development of the, how should I say, Bewertungen in the internet. It's also about the fact that they buy again. And if the margin out of that increases in a way that you've planned, then that's the sign of success.
What are you most focused on right now? Is it retention, new product launches, maturity?
We made a new concept of customer service that we follow now, which is good for the next step. Uh, and like any of those questions kind of like has to be answered for 3 or 4 different brands. And if you see Miva, then it's the launch of the new vacuum cleaner with everything around it. If you see
Mm-hmm.
Feminera, it's the launch of 3 new products with everything around it, like reaching the return customers, also reaching new customers via ads. And yeah, snap by steady going and being put on a new level at the moment.
Mm-hmm. Awesome. And for e-commerce operators that run e-commerce businesses in 2026, what do you think people still do not do underestimate about this industry, about this business line, and what would you recommend to focus on in 2026?
Yeah, also based on 2026, uh, yeah, watch the market and go to places that are really sure. The competition is getting bigger from out of everywhere, and so yeah, seeing on 2026, that question is kind of hard to answer.
If we were to wrap it up for this conversation and kind of like talk about internet app, um, let's imagine you look at the end of 2026 right now. What would success mean to you?
Okay. Yeah, success means just going the way we started, achieving the turnover goals and increasing the margin, which is the step for this year. And we settled up on every point and got our goals for ad spends. We got our goals for COGS and got the suppliers' products ready. We know that it's gonna succeed to establish all those new products, but we also know that there's always stones on the street that you gotta put away. But
Hmm.
that's gonna be good, and that's the goals for us. And it's just like achieving the plans.
Awesome. Thank you so much, Roland. It was a great conversation. I really enjoyed the fact that you treat growth not just like growth in general terms, because like after the headlines, there is eventually a lot to handle and to normalize, if you will, processes wise. And the company has internet app has proven its demand, build momentum, and now has to become structurally excellent. Roland, for anyone who's listening, I'll leave the link to the internet app down below, to Roland's LinkedIn profile down below. Please feel free to reach out. In the meantime, Roland, thank you so much for joining the show.
Thank you so much, Jack. Was a pleasure.
It was a pleasure.